Greetings, Dr. Jeffrey Scott, and this is my weekend update for October 30th, 2022. I titled it Markets Rally on Apple Earnings and asked the question that everybody's asking me, is this a bull trap? My email address is hgsidoc@gmail.com, and I recognize that there's echoes and the sound isn't great. I wasn't going to do this because of that, but so many people were asking me about when my video was coming, so I decided to very quickly put something together. I'm just checking to make sure my mic is turned up all the way. It looks like it is. All right, let's go ahead and get started. As always, this is for educational purposes only. Anything I talk about should be taken in the spirit of education and not be considered investment advice. I am a doctor, not a broker. I'm independent. I pay for the tools that I use, and trading involves risk, and you are solely responsible for any investment decisions you make. My meeting is up and scheduled. I've already had 7 of the 15 people sign up, so if you're interested, you need to reach out to me. 2 days, all meals during the event are covered, including dinner Sunday night at Capitol Grill, December 4th and December 5th. I give out a bunch of indicators and different things to attendees. The basic agendas here, I spend a lot of time teaching people what I've learned from Ian and other masters, combining those things with various software programs to find my best setups. How do I use seasonality? I've already contacted a potential guest speaker, and then we'll perform my weekend review live on Sunday. On Monday, we'll look at pre-market prep. I'll talk about options and how I use them, money management, my A-trades, earnings roulette, and defining your own. PBI is 20 minutes from the meeting. If you bring a guest, they're welcome to join the dinner Sunday, but there's a fee for that. No online. This will just be live, $1,000 per person, hgsidoc@gmail.com. You send that, and I'll give you all the information you need. So let's go and take a look at the charts. So if we look at 5-day performance and we look at things like the spiders was up 3.9, NASDAQ was up over 7, the Russell was up 6, the NASDAQ was up about 2. They had some earnings challenges. You could see FANG was down 4.1, NYSE was 4.6, and the Dow was up 5.7. So obviously a very strong week in the markets. In fact, if you look at the S&P 500, it is now below 20%, so it's 19% down. So I guess technically the bear market is over. Ha 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 ha. This is the part that I find most interesting, and let me just do this and bring this down here, copy, and paste it over here. Look at things like the diamonds is up 14.6% in 3 weeks of trading. The spiders up 11.8, biotech's up 24.3, Q's up 10.6, and NASDAQ up 10. So we've had a pretty ferocious rally. And so is this a bear market rally, or have we turned the corner and are heading to new highs? Markets, you can see we're getting extended. 40% of the stocks in the S&P 500 are now above their Bollinger Bands. That tells me a pause would be natural. Think about what's coming this week. Will we get it before or after Powell's speech? 88% of stocks above the midline. Again, this is a very, very extended picture. You could see it was 3.5% above the Bollinger Bands on Thursday close and over 40% on Friday. And if you look at even over the last month now, the very green pie. So we've had this rally, which has been occurring over the last 2 weeks, has been enough to take the entire month and make it look positive. The warehouse report, notice everything is above zero. There's kind of a trend that the lower ERG or the junk did better, and you could see EPS rank performance on lower EPS actually outperformed higher, lower relative strength outperformed higher. So perhaps we're still seeing some rotation and makeup on the junk side, but overall a positive week in the market. Now in the NASDAQ, we did get a weekly bongo turned green. This is the Kahuna line. Let me fix this. There we go. Copy this. Come back to the NASDAQ. Let's just put that in here. Paste. There we go. You can see the weekly bongo turned green. We actually started to get a few new highs. Still have new lows on the NASDAQ. NYSE, notice new highs have been going on now for days, and the new lows on the NYSE have dropped. And you can see the NYSE also turned green. So these are some green shoots. And if you're looking to say the market is rallying to new highs, it's got to start somewhere. I don't buy it, but we've got a very positive start. The buckets, this is using EdgeRater. You can see the high number of stocks above the Bollinger Bands. And this is the opposite picture. This is when the market bounced, and you could see 45%. So we are extended. Doesn't mean we have to pull back, but it's something to be aware of and pay attention to. Energy, you could see on the week, lots of green. Oil, natural gas, gasoline, heating oil. UK gas was up a lot. Metals, not so nice. Predominantly red throughout, and the Baltic Dry Index spot price also dropped on the week. Interest rates, interestingly, for the first time actually turned down. Is this going to be meaningful? Who knows? Notice as they've pulled down, the markets in yellow turned up. If we look at the credit risk here, you could see actually here, this is the this is credit risk. You can see that it's come down, but it's still elevated. If you look at the 210 spread, you can see it's still inverted. And as I've talked about before, recessions occur when that inversion gets better. Overbought, oversold, stocks above the 200, stocks above the 40 increased considerably. 12-week new high, new low is also getting near overbought levels. It'll be interesting to see if this McClellan oscillator actually takes out the prior highs, because we have been in a divergence there for so long, and lower highs and higher high here might point to a reversal of this bear market sooner than later. Economic news, wow, what can you say? ISM will be important on Tuesday. You've got Chicago PMI, manufacturing on Monday, but you got the big kahunas on Wednesday. You've got some employment, but you've got FOMC announcement and a Fed chair press conference. On Thursday, you got some jobless claims, excuse me, and on Friday, you've got the employment situation. So we have a week filled with news. On the earnings calendar, lots of earnings. I'm not going to spend much time here. Stop the video or go to Earnings Whispers and get your own chart. You got to know when your earnings are there. If we look at the expected moves last week, and we can even look at the worst performer among the majors, the NASDAQ, everything ran up Monday. Tuesday, we had an intraday reversal. Wednesday, a negative day, but closed within the range of Tuesday. Excuse me. Yes, Thursday, a weekday, and it looked like, this is the NASDAQ on earnings. You could see Thursday on the S&P, not quite as bad. Thursday on the diamonds, they didn't do much negative. Thursday on the Russell did very little. And then a massive uptake on Friday, closing out of the range, expected range on the E-minis, within it on the NASDAQ, way above on the YM, above on the Russell. You could see the VIX closed below, and the dollar actually traded below and closed within the expected range. So despite some trouble midweek, the market did quite well. What are my thoughts? Markets continued the momentum from the prior week and finished at highs despite big cap tech earnings misses. We have another big news week led by the FOMC and probably another 75 basis point raise. I don't think there's much talk about anything less than that. But if you're expecting a pivot, you'll be paying close attention to the dot plot and whatever announcement we get. Markets seem to respond better to the non-FANG earnings, and we have another big week to come. The question is there again, are we in a new bull as major indices are up over 10% from the low, or just another bear market rally? I personally am in the bear market rally camp. I have deployed a bit more of my cash, will add as this market continues to rally, but I think caution is still warranted. Here from Bloomberg is the S&P 500 2000 to 2002.com crash. Here's a 2008 to 2009 financial crisis crash. Notice how many in green bear market rallies, and that several of these are over 20%. Here's 24% in 2008. The point of this is that you get bear market rallies. They can be ferocious. And to prove it otherwise, this is just another bear market rally, in my opinion. If you like these videos, and I apologize again for the sound, but I have a nightly video. I'm probably not going to do much this week as I'm on vacation, but stocksanddocs.com. All right. Let's take a quick look at the charts, and in the essence of time, I'm just going to go through wealth charts today. Now, I like to start in the hot stocks to give me a sense of what's working now. And I am a healthcare provider. I have a healthcare technology company, and I typically do a lot of biotech. Now, notice what's up at the top here with the flame. So biotech not only has a super high score of 800, as does XLV. And interestingly, momentum is doing well. It has it's hot now. So IBB and biotech are breaking out. You can see it here on this chart. If we look at the indices on the daily, and I'm going to try and do this relatively quickly this Sunday Eve, you could see the spiders have now broken above their 50-day moving average. Now, if you go, they're still well below the August highs. They're above the June lows. My target is somewhere in here now between the June highs and that falling 200-day moving average. Breaking above that will be very impressive. Notice the weekly bond goes green. The Qs are lagging. They're not above the 50 yet. That could be resistance. The diamonds have now run into that downtrending 200 and look to be breaking above. That's kind of exciting for the market. If we look here on the Russell broke out above the 50. And if we look here, the VIX is broken down and the dollar's bouncing around the 50. On the commodities front, gold is way off its highs. It's below the 50. Silver has been performing better, and it's holding above the 50. Oil is stuck between the 50 and 200. And natural gas, which was up on the week, continues to be manipulated with the geopolitics. And although we talked before that the 10-year has fallen, it was up a little bit on Friday compared to the Thursday close, but you can see how it dropped in the prior 5 trading days. If we look at my weekly market timing system, what I wanted to show you is the spiders are right up against that 30-week moving average. The weekly bond goes green. That is close to turning buy. Qs are below the moving average. Weekly bond goes green, and I'm looking at the WMA. Notice both the Russell and the diamonds are in more of a buy mode, taking out the 30-week WMA with weekly bongos. So much more bullish than it's been over the last several meetings. On the market themes, remember up here is for large caps, down here is small caps. I think we're seeing a change where for a long time we were moving towards the large, but small is becoming more interesting, and you can see here on the daily chart we're pointing towards the small. The other thing is we're still looking at value. This is the daily, and if we look at the hourly, so small cap value is starting to show its arrears. If I look at the hourly S&P sectors and look to see where the strength is, what I'm really looking at are a couple of things. I'm looking at green shoots, which would be long green lines near the end, like you're seeing in financials or industrials. Technology even picked up despite the bad earnings. I'm looking for things near the upper right-hand corner. So where's the strength? Financials, energy, healthcare is strong as well. And you're starting to get green shoots on other things down here. But right now, I'd say compared to the S&P 500, the outperformance remains in energy, financials, industrials, and probably healthcare. If I go into my bull scanners to take a look at what's working and what's not working in the market, and I look at the weekend review list. Now let's back up. Let's start with the heat map, and you can see the S&P 500 very strong on Friday. If I jump into sector scanner, sector scanner showed the only down was energy on the week, and it was on the day rather Friday. It was minimally down, and on the week you could see real estate starting to move, industrials, interestingly communications because it's been weak, at utilities. All right, so I've already done my build my watch list, so we're going to move forward on the wealth scanner. Let's look without requiring the flame to see what's moving up, and what you can see is energy at 850, insurance at 820. There's IBB and healthcare, momentum, aerospace, oil services, oil producers, and then we drop down. So energy is weakened some, although the XLE is still up at the top, but biotech seems to be getting nice and tasty here. If I go into the CAT scanner and I start with the weekend review, and let's bring the, now what I'm looking here are things that have 5 and 500,000, at least one bullish dot, and let's look for things that have recently changed. So let's go down here, weekly bars. You had to turn up within the last 10 days on the, oops, we don't want to do that, on the daily bongo, less than or equal, leave that alone, 10, and we're going to come down here and we're going to make sure we got bullish daily and bullish weekly. So these are stocks that should be in a longer term uptrend that had a recent pivot to the going back up. So what came to the top is Dexcom, DXCM, and obviously it had a major move on Friday. This has been in a nice uptrend for quite some time. It's still well below its prior highs, but you could see the already on a weekly the uptrend. Look at the relative strength when that bongo started going green. Why I liked it on Friday was broke out here, 4 dots, gap volume, breakout momentum. Look at relative strength and OBV turning up. This is interesting. Now the challenge is going to be on the high jump. Up here is really at 100, and so that's sort of is the scary. It's probably extended, but when you think about it, it's really not, because it's just above the moving averages. So Dexcom looks interesting. Flagstar Bancorp, probably too much of a gap for me to chase. I don't like where it closed. HAAC, don't know this, but it's a SPAC, so let's just keep moving. Knowles Corporation. Now this is what you're going to see a lot of in the market. Yes, the weekly bongos turned green, so it started moving up. You got a breakout with volume and momentum coming out of a squeeze, OBV and relative strength picking up, closed above the 50, and yes, this could potentially run up to the 200, but you got to wonder how many of the people back here on the left are just looking to sell. nVent Electric, an industrial player, this is one that also gapped up. And you always have to ask, why did it gap? Is it on earnings? But 4 dots, relative strength and OBV turning up, wealth signal there, EMS back here, major volume. This is how I find the stocks to put in my list. Pinterest is what I'm thinking about this week. And Pinterest also had a gap up. It is right above the moving averages. 4 dots, daily bongo just changed, relative strength and OBV turning up. And the thing that I really like about Pinterest is they're talking a lot about it on TV too, about where it's going. Now Kramer had them on Thursday. That might be why it gapped on Friday. But Pinterest is different than a lot of the other social media plays. It's different than Amazon. It's an interesting place. So Pinterest also looks good. Now, again, just like the last one, a lot of stocks you're going to find are not breaking out to new highs, and I expect them to have overhead supply. Apple, had a great day despite its earnings initially pulling back, but you broke out, ran into the 200. Now, Apple, I love Apple. Everybody loves Apple. I've got iPads, iPods, AirPods, everything Apple. But I got to get it above the 200 before I'm going to start playing with it. Relative strength in OBV turned up. Lots of volume on Friday. Let's see if it can get above 200. Apple keeps going. It can pull the market. ABCL. This is a biotech. And you could see it broke out above this recent congestion on nice volume and momentum and relative strength in OBV. Again, overhead supply is the problem. Now, I talked about healthcare moving, so I've got a healthcare sector here. And let's see what comes to the top in healthcare. So we got Dexcom, ABCL, Boston Scientific. This was a runner in the past, and it's sort of, is it getting ready to run again? I mean, a break above this high, 43.50 or so, might be interesting. 3 dots coming out of a squeeze. Unfortunately, a lot of the biotechs have run. VRTX, Vertex has just been a leader. Look at the big run here. Now it's kind of loose. I can make it look less loose, but big volume breakout this week. Big volume on Thursday or Friday. That one looks like it's setting up. Let's see. So if I go into my buy watch list, let's see if anything comes up to the top. So I like Pinterest. I liked Apple. I liked ABCL. We just talked about this one. Aon broke out above the 200. 3 dots. Talked about insurance looking good. Arthur Gallagher is an insurance broker. And then you have a lot of things that are beaten up that have really small PEs. And as we move into value, you start to wonder about things like Best Buy, which is starting to move. Dick's Sporting Goods, which has been beaten up, but it's now basing, ready to run, perhaps. What else on that list? Lululemon, again, another stock that's come down from the crazy valuations, perhaps getting to run. Now, my complete watch list of the stocks I was interested in is much bigger, and I don't really have enough time to go through them. But other stocks like ANF, Abercrombie and Fitch, take a look at their multiples. They're at really not historic, but recent very low multiples. If we're rotating into value, are these the things that I want to be looking at? Cat's or Pillar broke out nicely this week. Capri is another retailer with really low multiples. Would I put all my money into these? No. But I might look at one of these or 2 of them to put some money in because they are pretty cheap. Genmab is not cheap, but this is a biotech that's breaking out and a biotech that is getting back to its pre-2022 highs. So I showed you a number of stocks. I like the CAT scanner because it brings the best stocks up to the top. And if I just go into the all symbols, let's see if anything else comes up. And this is how quick it scans the entire market. Dexcom we looked at that. New York Bancorp, big move up, but closed too far to the bottom. T-Mobile, this guy broke out as well. Look at the volume on T-Mobile. 4 dots. Look at relative strength in OBV. That one looks really interesting as well. So, my thoughts are simple. This market continues to go higher. It's difficult to fight the Fed, in my opinion, and the Fed is in control, and we're going to see what the Fed does on Wednesday. If the Fed comes out and says we see no reason to loosen and we think we're going to extend the raises, then look out below. We're going to go back and retest. If the Fed starts to pivot and suggest that we're going to be more data dependent and perhaps we can start slowing down, markets go back to the races. Have an awesome week, and keep in mind, since I'm on vacation, I may not be posting very often.